Okay, so we had some JOLTS news come out, which totally ruined what I thought would have been a perfect right shoulder forming here to flush the markets in an ideal fashion. So bad news, JOLTS meant good news because now rate increases are probably likely to stop or not go as high for as long, whatever you want to call it. I think it's ridiculous, but we've seen bad news equals good news for many years actually. And this is ruined the right shoulder. So it is what it is. To be honest, we have news every day. So this could be negated immediately. And what do we have coming up? We have German retail sales in 3 minutes. I don't think that will move the markets too much. Maybe the European markets when they open in an hour. We have the European CPC, but really it's US CPC today. But again, tomorrow, more news. Every day there's news. So I don't pay too much attention to what the news actually is. I mean, I do, but I don't really care too much. I just say, okay, there's news every day, so just trade accordingly. Non-farm payrolls, ISM manufacturing. So that's a big day. So whatever happens today is probably negated tomorrow. But will it still be? I think it will be. Bad news equals good news, or bad news equals markets up, and good news equals markets down. Let's see. So maybe we just have an instant move down, depends how good the news is. But otherwise, the S&P, no real resistance until the absolute highs. We have a small gap fill here, but no very, very strong resistance. I do think it won't be able to get to the highs until tomorrow because tomorrow's huge news. But look, we've seen markets go up I mean, this is pretty strong stuff. I think it's ridiculous, but I can understand why, the indication of interest rates being lowered would spur the markets higher. But let's see what happens with the news today. That's all I can say. I don't think we'll get to the highs before the news or even after the news. At least new highs, I think it would stall because this is a very bearish engulfing candle and it's not over. The bearish drop is not over. The Nasdaq just looking like the S&P took out resistance, closing a high of day. Okay, this gap is irrelevant, but really I don't see us going all the way up to the 385 zone until you need Thursday and Friday to be up days for the markets after the news. So let's see if the news has a way of pouring cold water on this rally. And I don't think interest rates are going to stop going up. I think we'll still have another hike this year. And I think where interest rates are is enough to break the system. We're hearing a lot of stuff about banks, commercial real estate, Charles Schwab. I think it's middle of September, expected to collapse. I mean, there's so many black swans and the market's going up. I mean, yeah. Dow Jones, by the way, did run into resistance, did not close a high of day, tagged price support. So a move down would be more likely than Dow Jones. That would be one of the quickest markets to go red. Again, everything depends on the news, but I think I'd expect more resistance on the Dow Jones. By the way, support, yeah, small support here on prior resistance. Otherwise, the ascending and also on the way down, there's no real support until really the horizontal or the ascending, which probably coincide by the time we get down there. S&P, same sort of thing. We come back down. I think it's really, okay, we have this prior resistance. Otherwise, if it's a big move lower, then just 433. I don't think we're going to get to ascending. That would really have to collapse and close below here. And then we've got retail sales. But anyway, let's look at the Russell, bit like the Dow Jones. Tag did not close a high of day, but pretty close. It's a lot weaker than the S&P and the Nasdaq, bit like the Dow Jones. And if we move down, probably fall into ascending support. So it's pretty clear the support and resistance for me. S&P and Nasdaq, it's really the ultimate highs of the bear market rally. Dow Jones and Russell, it's the very nearby horizontal, and the support is generally the prior lows or the ascending if it exists. The banks, look at this, hits resistance also. Resistance, by the way, being old, descending, which it broke out of but didn't really follow through on, which we understand because at that point the market started to collapse. So couldn't really have this late rally that was primed. Bounced here perfectly, hits. So let's see what happens. This is the banking sector. I think the banking sector is toast. I think even if rates drop a little bit or we have indication that rates will not stay up for as long yet, but the rates where they are now, the mortgage, the commercial real estate, the student, the car loans, like loans, the debt, this is where it all happens. And I think this is going to be the first sector to collapse and take the Russell and then the Dow with it. And then these little tech sort of fake markets, really paper tigers, in my opinion, it's really the Dow and the Russell that are the industry of America. I think they can fall very quickly once these Dow and Russell giants, really hidden giants, start to collapse. And I think the banks would start it all off. And anyway, I'm not going to go on a rant just based on this little candle, but it's a little indication. They did not participate in the rally, let's say that much. So a little weak, and maybe the banks are ready to come lower. That's the XLF hitting resistance. Next support is really the old horizontal, clearly. KBE, same sort of thing, it rallies, but only back into the ascending, doesn't even hit its horizontal. If we come down, to be honest, this line, that was a general line for this area, and it didn't even play a part. For me, we can move that here. That's your support. The ascending will be irrelevant today. If we start going down, we hit this, then let's see if we close below, 370.3, 37.5, and then we'll move down to here. So the KB and the KRE are looking like the weakest ETFs out of all the ones I've looked at. And for me, that's how it was whilst the market was collapsing during the banking collapse. And we could be very close to that. Maybe this is an indication of what to expect for some banks like Schwab. KRE looks exactly the same. So, let's see if we close below this 43 zone and then flush back down here. That is still on. We've got this looking very weak despite the S&P and the Nasdaq looking like they want to touch their highs. Let's see what happens. Give it a few days. But I think the banks are definitely underperforming the S&P and the Nasdaq, and they could ruin the whole parade. All right, let's move to interest rates. Very interesting stuff. So the 1 year, the 1 year, the 2 year, all the yields actually looked like they were primed to break out, and then we came back down because again the JOLTS number suggested that rates are going to go lower. I don't believe that, but when you're flagging at the highs, that's enough to just retrace you. So 1 year back down to this parallel zone, but still holding pattern, ready to go up again probably. 2 year, we were ready for a triple top breakout. The JOLTS ruined that. Back down we go, but still holding. If I drew an ascending here, it's probably holding perfectly. So let's see, this is negated now. Again, resistance is the horizontal. Let's see if we can break out. Otherwise, do we go low? And if we do we start to close below this 4.7? That could take us low, and then we'll see. But only news can do that, in my opinion. And the rest is the same. 5-year retrace, 10-year retrace. But look where we were. We made new highs. This is still very bullish stuff. And again, if you start drawing some ascendings, we're probably just about holding for now. Let's see. It really is ruined only if you start closing below, 3.95. And even then, you're still kind of not bearish. It's just a bit of a head and shoulders, and back down we go here, but still not bearish. Look how much we've come back up. We're still overall bullish on yields going high and bonds going lower. 30 is same thing, just a retracement, a little further retracement because of the JOLTS. Let's see what happens today. CPC, non-farm payrolls, ISM manufacturing. So for now, just the pump higher has been delayed. Let's look at the dollar index. This has been interesting. Also, look at this coalescing here, absolute chaos, but I leave it there on purpose because they're very important trend lines, in my opinion. We had this breakout here, and then just final gate of resistance. And the most important resistance was here for me, clearly, but the final gate at 104.5 worked perfectly. Back down we go, coincided with the JOLTS, and now we're trading. We bounced here, a weak bounce, but 103 happens to be the bounce zone so far. I will clear this up. I just want to leave it for the week. Don't worry, I'm not going to keep this, but if you zoom out, why it's there, and I don't think it will ruin the clear candlesticks that are forming day by day. But here we are, we're bouncing around 103. Let's see what happens. Again, news. We did, however, close below this ascending, and that suggests that for me, it's going to be hard to. No, it's possible, especially with news today. But you could rally and back up to 104.5 and then break out. I do think, what? Now that we've actually touched 104.5, you could actually remove these. Now, I remember what they were, how significant they were, but you could remove those, and you could actually remove this. You could do it already. Now we have lost this ascending. I'm going to keep that because I think that's still important. If we rally, hitting the ascending again would be resistance, plus that will coincide with this. So I do expect some decent resistance at 104.5, even if it's based on a news pump. If we start to take out 104.5, honestly, it's looking very bullish. But let's see, if there's bad news today and tomorrow, we could go back down to 102. And then well, then let's see, news again will affect it. But that really would ruin the massive move up. I don't think we're allowed to go all the way back down and make new lows because this is a serious surge. You know, you are allowed to have little pumps. You should have. I mean, it could even be one today, especially based on news. So I don't think we'd be going all the way back down in one go. But let's see how it's affected by news. Again, the dollar and interest rates totally tied. And at the moment, dollar down seems to be market up. I don't really agree with that. Long term, I don't think that will be the case. You could have the dollar and markets go lower together and bonds. But for now, there seems to be a bit of a move up in markets when the dollar goes down. It's all, everything's related to the same thing, interest rates. I've always said interest rates are the most important thing. And at the moment, any indication that interest rates will be lowered or higher for not as long, anything like that, market goes up, dollar goes down. It's pretty simple stuff. It's just how, at the moment, bad news seems to spur that move. It is what it is. Let's look at commodities. Yeah, copper's rallied with the markets with the dollar going down, so that's okay. I don't know if we have enough strength to get to 3.95 or 4. That depends very much on the dollar move. This ascending is starting to look very, very useless now, actually. Now that I look at it, I might remove, I want to remove it, don't need it. But yeah, at the moment, copper's moved up a bit higher with the markets and with the dollar going lower. Let's see. I really think that a video on Friday will be very important because then you've gotten rid of all this important news. We'll have to see what news is coming in next week, but there's news just coming in fast every day. And some of it is undocumented news, like a breaking news, black swan style news. And the banking sector, I think, has news for us coming that we don't know about. But okay, copper is just holding up, but I don't think it's very, very strong. Natural gas, however, look at this. Again, it's done it. Came all the way back down, played with us around 2.5. Nope, goes all the way back up. Look at yesterday's move. Beautiful stuff. We had this fake breakout here where it closed just below the descending, and this descending is important. I did readjust it because it broke out of it before, but then because of this massive move back down, I thought I should readjust it. And again, back down we closed, but no, we returned. Today we have closed. I mean, yesterday we closed clearly above this descending. This could be the one. This could really be the one. Natural gas could get to 3 very quickly. If we close above 3.05, that's it. We're done with this playground and we start to move towards 4. Natural gas looks very, very good. Oil is starting to move up again. And as the dollar goes down and the markets go up, it probably continues. Now, oil, I mean, this retracement from 83, 82, 83, pretty happy about that. I thought we'd get to 79. I did think we'd go lower with the markets. The markets have started to go up. However, the thing about oil is going to ruin all this inflation. So going out, I don't think the thesis is wrong. I think inflation goes higher, stays high, sticky, I think they call it. And interest rates will not be able to be that low. Oil is a big component of inflation, calculating inflation, especially for Americans. And as oil goes up with the markets, that will ruin things. So oil going up is not good news for the US economy or the Fed, let's say. So this might be a bit of a worry. This could play a role in markets going down, actually. But for now, look, it looks fine. So let's see what happens today, tomorrow. And then we'll do a video on Friday. But look at this. This could easily pierce 80, 85, and then start going towards the 90s. We've got our trend lines in place for that. All right, uranium, this is the strongest one. It's been the strongest commodity for a while. Look at this. I said we'd keep going up. We'd start testing 24. We've done that. Okay, we closed below trend line, but we did close above 24. That's significant. What do I think is going to happen? Yeah, you could have a down day and it goes down a little bit, but nothing is stopping this move up to 30, first at 28. There's really no real resistance before 27, 28. And after we do 28, even 30 is not relevant. It goes straight to 31 and even 32. So uranium, just no problem. I think the uranium miners, URNM, has had a breakout. I read that. I haven't checked the chart. You know what? I'll check it real quick. URNM, where are we? Okay, I read breakout, but no, not yet. But look at that, we're on the money. I mean, look at this resistance here, 38.5-ish. You know what? We pretty much have had a breakout. Again, you could have a bit of a low move, but wow, straight up to 41. Well done, uranium bulls. That's beautiful. You deserve it. Okay, now let's look at gold and silver. That moved up also with the dollar going down. Now, I prefer it going up with the dollar, actually, because then it would go up even more when the dollar retraces. But it went up with the dollar going down. That's normal. It went up with the markets going up. That's kind of normal, but I prefer it if it goes up when the markets go down, because the markets have a long way down to go. I saw an indication of that starting, but whatever, I'll take it. Gold up is good regardless. Look, for me, 1940 was resistance. We hit it, but we kind of have been playing above 1940 easily. I just want to see how it reacts to the news today and tomorrow, and how the dollar does, and how interest rates, and how the market does. How it reacts to the markets too. For me, keep it simple. Next resistance, and I remember this clearly, is 1970. 1980 is hard to get to in one go. I think 1970 is also resistance. Just, I don't even need to put it in, but I just remember it might not be easy to get through 1970. We may meet some resistance on the way, but 1980 is the clear resistance. A close above 1980 is what we need. But for that to happen, we need probably the dollar to collapse today and tomorrow. Go to 102, close below 102, something like that. But we can see that gold is capable of these moves. We've had a nice bounce from 1885. And so far, everything's okay. But, everything depends on the news, the dollar, and everything else, but mainly the dollar. Silver went all the way up to tag its resistance. This is 1980 gold style. So silver is really outperforming. But look at this tag, very, very strong, kind of bearish candle, let's be honest, yesterday. So I think it's not ready for this move. It probably needs gold to start marching to 1980 to start closing above 25. I think gold needs to catch up with silver. Otherwise, silver may have a bit of so far it's a bit red, but a bit of a red retracement day, and gold may be a little green. I think we may see a bit of gold versus silver outperformance in the next few days, whether we go up or down, actually. So I think gold will catch up with silver, but silver clearly has had a nice run. We just need gold to take over now. Silver's just a bit tired. Otherwise, it's tagged resistance perfectly, absolutely perfectly at 25. It usually does work in 50-cent increments. So let's see what happens with the news today. No need to overdo it. Support on the way down. Probably here you can see a little bit of resistance, a little bit of support. And it's on basically $24. Also a psychological number, nice 50-cent increments it works on. But here, if we lose 24, I don't think 23.5 is real support. We could go straight to 23. So let me delete this. This, by the way, ended up being super support, so much so that we never even got there. People bought early. So very strong support on silver at the bottom, but I don't think we're going to go all the way back down there, not for a while. All right, let's look at the miners. Miners also hit resistance. This is probably silver, when silver was such a bearish red candle. Even though it was not very red, it was just the way it closed. You can't really have miners up with silver, with silver's candle, right? Let's just remind ourselves of silver's candle yesterday, tagging and closing red, but still GDX, nice move up. Some of the miners, by the way, tagged their own individual resistance, so that was nice to see. But okay, we almost touched the one I identified, this horizontal. Maybe I was off by a few cents, but there you go. Let's see what happens to gold and silver. I think it's a bit tired also, even though it's not the biggest move up. It's a bit tired, but let's see if gold can win the day. Gold needs to march higher for silver to start going green, and for the miners to continue their move higher. But we do have resistance. This descending line, I think, will be resistance more so than the horizontal. GDXJ, I mean, look at this candle from Tuesday, closed right above. That's very strong. But again, when silver's red, I think it needs to go red. And we started to find resistance before hitting the descending. So let's see. There is some resistance in the miners in silver, but gold looks okay. It's cleared 1940, and there's no obvious resistance until really 1970/1980. So gold is the likely candidate to win the day for silver and the miners, and obviously gold itself. But everything hinges on the dollar and news, as always. So Bitcoin, I'll say only one thing about Bitcoin. We had a nice move up with everything else, with this ETF. I think there was some ETF, it bores the hell out of me. But look, we lost ascending support, we bounced with the markets, and now we retest ascending, and now it acts as resistance. So everything's working perfectly. If the markets go lower, Bitcoin is very sensitive and will go down with it. And watch out, now that we've had our pump, if we start to move back down and test 25,000, this will look super bearish and easily could flush to 20,000. So Bitcoin still not bullish. Anyway, with that said, have a good day. Good luck.